Hello, all my dear students. I am Professor Sheetal Kirbarge from Abasaheb Marathe Arts, New Commerce and Science College, Rajapur. Welcome to all again. Today we are going to study the first chapter of SYB Forms Accounts Paper 2, and this is the company account. Today we will learn about introduction to this topic, which is chapter number 1 of this syllabus. Okay. This topic is basically on the company account, and there are 3 units in this topic. We are going to study all 3 units. Unit 1 is basically the introduction. Unit 2 is issue of shares or forfeitures, and Unit 3 is basically for the debentures of the company. So this is the basic structure of chapter number 1, company account. Company account has been divided in 3 parts: Unit 1, Unit 2 and Unit 3. There are Unit 1 is an introduction, which is basically you have a company account, what are the financial statements that are required to be maintained. Unit 2 is basically for the issue of shares or forfeitures or reissue of shares, and the Unit 3 is basically for the debentures. So we are going to study the Unit 1, Unit 2 and Unit 3. Okay. Next is definition of company. The first which is have to the introduction, and introduction, the flow of chapter is like first concept is basically understanding the company, meaning of the company, features of the company, types of the company, and secondly what we have to see the account of the company and financial statement which the company is required to maintain. So let's start with what is definition of the company account. We can see on the screen. Moreover, the definition is the term of company is implies an association of a number of people for some common objects or objects. And second one is the most important definition. A company has a company as a company incorporated under the previous company law, and this last one, Professor Honey. A company is an artificial person created by law having a separate entity and with perceptual succession and a common sale. So this is the very simple definition, but it has a lots of meaning. For the particular company, it has a by all the previous all the company that which are maintained for the particular company under the Companies Act 1913. Companies Act 2013. It means all the positions that which are maintained in the Company Act 2013. And it is to be followed only it can be considered in the company. So this is the just a one line of definition of the company, but it has a lots of meaning. Okay, now we are going to study the features of company. Okay, uh, okay, the characteristics of company we will learn. There are so many characteristics. First is voluntary association, then legal entity, then perceptual succession, transferability of shares, common sale, limited liabilities, separate property, democratic setup, professional management, capacity to raise finance, membership. These are some characteristics of a company. Now we will learn the first characteristics, voluntary association. This is a company is voluntary association of individual, and individuals come together voluntarily. Second one, legal entity. In this characteristics we will learn a company a legal status, it becomes a separate legal entity. Next one is perceptual succession. A company is continuous organization. It is not closed down unless permit. It continues its cooperating years after year, and member may become, members may be go, and law company continues its operational till the law says no. Okay. Next is free transferability of shares. Shares of public company are freely transferable from one person to another person. Hence, membership goes to changing. This is very important characteristics of transferability of shares. Next one, common seal. A company is not a natural person. Okay, it is an artificial person. A company has a common seal, that is seal which act a signature of company. It is put on the documents which require signature of the company, and it is optional for companies to have a common seal. Means this is the required Act 2015. Next one is limited liability. A company from organization is far superior to that the partnership due to limited liabilities. It is thus the placing of limited liability which has made a corporate form of business idea for investors. Liability of members is limited to the value of shares purchased even if the company is heavily adopted. The liability is of the company and not the shareholders. It is possible to register a company with unlimited liability. A limited liabilities is one of the most important characteristics of a company. Next is separate property. The separate property, we can see these characteristics in a company is a separate legal entity in the eyes of law. Hence, it is capable for holding, enjoying, and disposing of property. Okay. Next is democratic setup. A company as democratic setup, all the members have right to elect their representative on the board. The small body elected by the shareholders manage the company. It improves that quality of management of the company. Okay, democratic setup like that. Next is professional management. Okay, in that characteristic is management of the company is done by professional managers. The professional managers have brighter scope in the corporate from the organizations. Next is capacity to raise finance. A company is in a much better position to raise finance. It can issue prospectus inviting and members of the public to purchase its shares and debentures. Banks and financial instruments are less hesitant and advance loans to a corporate body. Okay. And the last characteristics is membership. In that the minimum one person is required in one person company and maximum 200 members in a private company. Whereas in public company, minimum 7 members are required. There is no limit on the maximum number of membership. Okay, these are the very important characteristics of a company. Next, we can see the difference of partnership and limited company. Now we can see the partnership versus limited company by point to point. First point is the meaning. It means the meaning of partnership and the meaning of limited company. These points may be given by one. Okay. Let's now see the meaning of partnership. Okay. The meaning of partnership is when two or more persons agree to carry on business and share the profit and losses manually. It is known as a partnership firm. And the meaning of limited company is It is an association of persons who invest money towards a common stock for carrying on business and share profit and losses. Okay, the next point of this difference regulating act, the difference between partnership and limited company is the regulating act. Indian Partnership Act 1932 is the partnership, and the limited companies regulating act is Indian Companies Act 2013. It is very most important question for filling the blanks. Next point is creation. The creation of partnership firm is created by manual agreement, and the limited company, it is created by incorporation under the Companies Act 2013. Okay. Next point is minimum number of members. The partnership, in the partnership, minimum number of members of, there are given 2 members, and limited companies, um, in the private case, it means in the private company and 7 matlab means 2 in the case of private company, okay, and 7 in the case of public company. One person in one case and one person is company. Okay, got it. Next is minimum number of members. The partnership firm is have a minimum number of 100, and limited company 200 in the case of private company, and public company there is no limit. Okay, the next difference in partnership and limited company is a management. The partnership firm in management of partners, and limited companies directors. Next is liability. The partnership in unlimited liabilities, and limited companies as limited liabilities. Okay. Next point is audit. Then audit in partnership firm is not mandatory, and the limited company has it mandatory. Okay. Next is next point is legal entity. In the legal entity, in partnership firm is called, they have not important for legal entity, but the limited company is very important. That legal entity means the difference of partnership firm is legal entity no, and the limited company's legal entity is yes. Okay, the next point is life. That depends upon the partners. Okay, means partnership firm is depends upon the partners, and limited companies depends life in continuous life. Okay, and next and last point is minimum capital. There is no minimum capital requirement in partnership, and in limited companies, for private limited company for 1 lakh, and the public company is 5 lakh. Like that, the difference in partnership and limited company, this is very important and very easy difference. Next point, we can see the types of company. Okay, there are so many types of companies. Following are some different types of companies as per the provision of Companies Act 2013. Okay, there are a little chart, given the little chart, and in that chart they give the some companies names and types of companies, like that tree diagram. First is one of the basis of mode of registration. Second is on the basis of number of members. Next on the basis of liability of members. Then next on the basis of listing and the type of companies. On the basis of the mode of registration, in that companies of statutory companies, registered companies, and chartered companies. Next one on the basis of number of members, in that private companies. Next public companies and one person companies. Next is on the basis of liabilities of members in limited of shares. Next is companies limited of guarantee, and companies with unlimited liabilities. Next one is on the basis of listing, listed companies and unlisted companies. It is so easy. And the last point is the other types of companies in small companies, associated companies, foreign companies, government companies, non-profit companies, holding and subsidiary companies, illegal association and procedure companies. This is only names of company. We now we will learn the basically companies of mode of the registration. Means there are three types of mode of registration. First is statutory companies. In the statutory companies, the companies which are registered under the Social Act of Central and State Legislature are called statutory company. They gives the example of these companies, these types of company. For example, RBI, Reserve Bank of India, LIC, Life Insurance Companies of India, and UTI, etc. Next is registered companies. These types of these companies, the companies which are registered under the Companies Act 2013 or under any other earlier Companies Act are known as registered companies. For example, Reliance Industries, Tata Motors Limited, etc. Next is chartered companies. The companies which are registered under the special charter guaranteed by the King or Queen of England are known as chartered companies so and so. Okay, for example, the East India Company incorporated in 16th and such companies are no longer in the existence of India. Okay, next one is on the basis of number of members. It means basic of the number of members in we are studying the companies in deeply. Private company, section 2 of section 68 of the Companies Act 2013. They give the act of company when this company was born. Define and a private company prescribe that the following features must be included in A/K of every private company wise. In that first point of the number of members of private company cannot expect in the case of one person company exceed 2000, not continuing the employees and ex-employees of the company who are also members. Joint venture have to be accounted as one mentor. And next one is a private company cannot invited members of the public to subscribe to its securities, and the term securities cover shares, scrips, stocks, bonds, debentures, debenture stocks or other marketable securities and like nature in or any incorporated companies or other bodies corporate derivatives and such other instruments as may be declared by the central government to the securities. And see, the point is there must be some restrictions of transfer to share of the company, and on the other words the shares of private companies should not be freely transferable. Okay, all of the requirements are cumulative in natures. Even if one is missing, the company is deemed to the public company. Minimum two members are required to form a private company. The public company next is section 2 of section 71 of the Act defines a public company as a company which is not a private company. The Company Act 2013 provided that the public company must have a minimum paid up capital of rupees 5 lakh or such higher amount as may be prescribed. The provision is amended by the Companies and Amendment Act 2015. It is now provided that the such companies must have minimum paid up capital of such amount as may be prescribed. The mandatory limited imposed earlier and the act has been deleted. And next and last company of this type, one person companies, the Companies Act 2013. has introduced the concept of one person company. It is defined by section 2 of section 62 of the Act as company which has person as its member. It paid up capital is not more than rupees 50 lakhs. Next is features privilege of private companies. There are some features of private companies. Uh, First is minimum membership, then maximum membership, minimum paid up capital, then directors, issue of prospects, managerial personnel, number of directorship, quorum, finance and purchase of shares, then conversation into public company, deposit, reports, independent director, share capital, purchase of own shares, restrictions of deposit, restrictions on loan, appointment on managing director. There are so many features they given, and uh, we will study after some time in deeply all that features. Not now. Next, we will see the difference between private company and public company. Okay, private company and public company. There are some point of private company and public company's difference. First is incorporation. Incorporation means the like members. Okay, private company in the private company incorporated with only two persons. Means only two members, and the public company incorporated with the 7%. Got it? This is very important question to filling the blanks, and also one line questions. So keep it up. Next point is maximum members. There are maximum numbers is 2000 sorry 200 members in private company, and in public company they have no limit on maximum members. They can give the how many they can give so many members in their company. Next is number of directors. In private company must have at least two directors. Okay, and public company must have at least three directors. Next point is issue of prospects. Cannot issue of prospects and issue prospects. It means private company uh, cannot issue means cannot publish the prospects, and public company can issue the prospects. They can give ad of their product. That means next is appointment remuneration. In the private company, registration restrictions about appointment remuneration of managerial personnel do not apply, and the public company they have restrictions about appointment remuneration of managerial personnel apply. uh, in the public company they can apply the managerial remuneration, and the private company they can not apply the managerial remuneration, in the simple words. Okay, then the restrictions of directors. Okay, in the private company directorship of 20 companies. It means the in the private company one director can work in other 20 companies. Okay, and the public company's directorship of 10 companies. It means the director of public company can work any other 10 companies. Okay, next is quorum. In the private company, two members constitute quorum, and public companies, five members constitute a quorum. Next is finance of purchase of shares. Cannot provide finance and cannot provide, in a private company can provide finance, and in a public company they cannot provide finance. Next point is deposit. In the private company, they can accept deposit from members, and in public company can accept deposit from public. Okay, the difference only the private company is deposit from members, and the public company deposit from public. Okay, got it. Next point is report. In the private company, need not prepare report on each annual general meeting. It means in the private company, they have not need to prepare a report of each annual general meeting, and the public company has to prepare a report on each general meeting. They have to prepare the report on each general meeting in public company. Next is independent director. Need not appointed independent director and must have independent director. Okay. Next is restrictions on deposit in private company. Not required to comply with certain restrictions on deposit, and in public company has to comply with restrictions on deposit. And last point of the difference in private company and public company is restrictions on power. No restrictions on power of the board, section 180, and restrictions on power of the board. This is like this the different between private company and public company. There are 13 points of difference, and all points are very important. You have to write minimum 10 difference if you have asked in the examination. The next point of our lecture is on the basis of liability of members. This is point of the types of companies. We will see the types of basis of limited of members. First type is companies limited by shares, and in that a company with limited liabilities may be limited by shares or limited by guarantee. On the case of company limited by shares or shareholders is only for the unpaid amount on the shares purchase. Okay. And second, companies limited by guarantee. In the case of companies limited by guarantee, the specific of fixed sum beyond which is member will not be called to contribute on the case of the payment of debts. There are some examples of Rima holds 10 shares of rupees 100 each, 90 paid, rupees 90 paid. In this case, limited liability means Rima is liable to pay only 10 per shares. It means 100 minus 19 is equal to 10 rupees. Okay. Then Miss Sejal is member of a company, so limited by guarantee, and the member of a company specifies contribution of rupees 10,000 at the time of liquidation, and Miss Sejal is liable to pay only rupees 10,000. And next company type of company is companies with unlimited company. As per section 2 section 92 of the act, it is open to a promoters of incorporated companies and limited liabilities. A company of unlimited liabilities has no provision in a limiting of liability of its members. The liability of members is unlimited, similar to that partners in a firm. Okay. And the creditors would be the more happy with the companies with unlimited liabilities, because they have better scope and hope of recovering of amount at the unlimited extent. Even then the creditors cannot directly proceed against the member. In such a case, the company has to be liquidated, and liquidators calls all members to contribute against the liabilities without any limit. Okay. There are two more types of the different types of the company, like basic of listing, and this is there are some two types of company basis of listing: listed companies and unlisted companies. And other types of companies in that: small companies, associated companies, foreign companies, government companies, not profit companies, holding and subsidiary companies, illegal associations. There are so many types in the other companies, and the features are given that it has no recognized of law, it can be wounded of under the act, every member is personally liable for liabilities of association. No one can file a suit against the third party. Their parties can individual members of the association for anything received by them and behalf of the association. And last features is the no suit can be filed but dissolution for of account of the association. And last is procedure companies. Okay, there are some like that the types of companies. Next, the important part we will learn formation of companies. The process of formation of companies divided into some stages. There are three, four like stages. First is promotion, then discovery of India, related investigation, assembling requirements, financing of proposition. These are some steps is promotion. Um, about that given the details in this book of our syllabus, accountancy and financial management, and the topic introduction to company account. And second is incorporation of company. Same that the companies are given the same details in this book. You can see and learn. We have no time for this companies. Next is validity of name approved and preparation of some these companies, commencements of business. Okay, it means the difference